Meta's stock has dropped more than 20% in the past few weeks, and of course, that raises two questions. First, what's causing this? And second, is this now a good buying opportunity? I want to take a close look at both of these points in this video. Let's start here with the stock price over the past few weeks, and since September 19th, it's dropped by a good 20%. We're down 22% to $616. Before that, it was almost at $800. And if we zoom out even further on the chart, we can see the long-term development since 2015. And here we also see that the stock price has performed excellently despite the recent drop, up by 500% over the last 10 years. But there was already a very, very big crash, which started here in August 2021. Back then, it was at $384, and a few months later, here in October 2022, the stock price was down to just $95 or $90. That was a drop of over 75%. Meta's current market capitalization is $1.5 trillion, making it one of the largest corporations in the world. We currently have a P/E ratio of 27. There's now also a dividend here. However, the dividend yield is only 0.34%. And why did things recently take such a downturn? For example, we have two announcements here. I found them here from Reuters, and on the one hand, Meta wants to issue a bond worth $30 billion to use the money to push forward its AI expansion. And they also write down here that they want to invest significantly more in AI in 2025. This news is from the 30th October, and just a few days later, here on the 7th November 2025, the next news came out again from Reuters. Meta plans to spend $600 billion on AI data centers, meaning AI infrastructure. And all of this is planned for the next 3 years. These are enormous expenditures being put into growth here. Of course, on the one hand, this is an opportunity, because if this growth or these investments pay off, Meta can make a lot of money from it. But if it doesn't pay off, the whole thing could turn into a huge loss-making venture. And this uncertainty hasn't gone over well on the stock market lately, causing Meta's stock to drop by over 20%. But that also means that at least part of this news is already priced into the stock. And that's why Meta stock could now be a buying opportunity. And that's what I want to find out now. So let's start with the long-term business development. We can see that revenue has multiplied from $5 billion in 2012 to $178 billion. Net profit has also risen rapidly from $1.5 billion in 2013 to $71 billion now. Free cash flow per share has increased from $1.18 to $20 per share, even though there were declines in between, especially in 2022. For example, free cash flow dropped from almost $14 per share to $7 per share. We also saw a 75% drop in the stock price at that time, because Meta was already investing heavily in the metaverse, and these high capital expenditures naturally caused free cash flow to plummet. That didn't go over well on the stock market at the time, which is why the share price dropped so sharply over several months. And in addition to the small dividend they pay, Meta also buys back its own shares. In 2022, when the share price fell so sharply, they bought back more shares, over 100 million shares within a single year. Most recently, there have only been minor buybacks, just a few million shares. However, when share prices are high, of course, fewer shares can be bought back with the same amount of money. On the other hand, when the share price is low, you can obviously buy back a lot more shares for the same money. Now let's take a look at the valuation level. Up here at the very top, you can see the stock chart since 2014, which basically kept going up the whole time, except for that big dip in 2021 and 2022. In the middle graph, we can also see that profits took a hit there. I just explained that as well. At that point, earnings per share dropped from about $14 down to $8 per share. And accordingly, the P/E ratio in 2022, as we can see at the very bottom, was only 12 or 13. So at this point, sentiment toward Meta was really, really bad. A lot of people sold off their shares. They no longer expected further growth after a few quarters didn't go so well. And that's often how it goes. When all the news is bad, when people no longer want the stock and valuations drop, that's when you have really, really good opportunities to get in. And that's exactly what happened. After that, the stock price shot up, as we've already seen. At its peak, it went over $700. And the valuation has also gone back up, as we can see down here, to a P/E ratio of around 25 to 35, always fluctuating a bit, currently at 27, which is clearly higher than in 2022. And I also made a video about Meta on my German YouTube channel in 2022. Even in October, right when the low was reached. I wrote here, Meta on the brink, and there I explained that I found Meta particularly interesting at that exact moment. I also bought Meta shares, and in the end, this investment paid off very, very well. I didn't stick with it until the very end, so not until the current all-time highs. I sold much earlier, since for me the risk-reward ratio kept getting worse. But I was able to make a good profit by buying stocks that nobody wanted, where the valuation was very, very low, and ultimately the risks were also lower and the opportunities higher. Of course, it doesn't always work out like it did with Meta, which I actually bought right at the bottom back then. That was more of a coincidence. As a value investor, it's not about catching the lows because nobody can reliably catch the lows or the highs. That's why you don't even try to do that. Instead, you simply try to weigh the opportunities and risks, and only invest when the opportunities are as high as possible and the risks are relatively low. Now let's move on to the current quarterly report. We see that you currently have $10 billion in cash and then again $34 billion in short-term investments, so altogether $45 billion in liquid assets. In addition, they have another $25 billion in long-term investments. So in total, that adds up to $70 billion. And on the other side, there are long-term financial liabilities of about $30 billion. That means overall, they have a positive net cash position of $40 billion. Or rather, when it comes to long-term investments, I always prefer to factor in a buffer, since you can't always sell these long-term investments at current market prices if you want to get rid of them quickly. That's why I would say here, maybe a positive net cash position of $30 to $35 billion, including a buffer. But since the market capitalization is $1.5 trillion, this net cash really only covers a very, very small part of the market capitalization. Consequently, the majority of the market capitalization must be covered by the operating business. If we look at the income statement, we see that Meta continues to grow significantly, and that's very impressive when you consider that Meta is already one of the largest companies. And the bigger a company is, the harder it naturally becomes to achieve high growth rates. And here, compared to the previous year, revenues in the third quarter of 2025 went from $40 billion to $51 billion. So that's almost 30% revenue growth, and the operating profit also rose significantly here from $17 to $20 billion, but not as much as revenue because there were much higher expenses for research and development, which went up from $11 billion to $15 billion. And net profit actually dropped significantly, but that's only due to this tax position, since there were very high tax expenses in this quarter. I wouldn't pay too much attention to that here, but rather look at the profit before taxes, and there we see growth from $17.8 to $21.6 billion. In the first 9 months, it went up from $47 billion to $60 billion, or after taxes to $37.7 billion, which is just under $15 per share, and that's for 9 months. Here we can also see the share buybacks again. The number of outstanding shares decreased slightly from 2.615 billion to 2.578 billion. So while there are share buybacks, they're almost negligible at the moment. Next, let's take a look at the cash flow statement. How much of the profit actually ends up with the shareholders in the end? And we can see they have a very, very high operating cash flow of $80 billion in 9 months. From that, we have to subtract the stock-based compensation. That's very high at Meta, almost $15 billion. That means there are $65 billion left, and out of those $65 billion, they spend almost $50 billion on investments, including expansion. That means there are only $25 billion left for shareholders if we extrapolate this to the whole year. With a market capitalization of $1.5 trillion, this results in an adjusted price-to-free cash flow ratio of 42. And to me, that doesn't exactly sound like a bargain. But what we also see is that these investments have recently gone up significantly. These $48 billion were only $22.8 billion a year earlier. And this clearly shows the current AI expansion, with a huge amount being spent on research and development and building infrastructure for AI data centers. And as they themselves have said, they even plan to increase this further in the coming years. So, in the end, that means there will be even less left over for shareholders for now. And whether this will really pay off or not will only become clear in a few years. And that's the risk side of the investment if you're investing in Meta stock. But of course, there are also opportunities, namely if these investments do pay off. Let's also take a look at the forecast for the coming years. What are the analysts saying? They still expect growth. Earnings per share are expected to be $29 this year, $30 next year, then $33.60, and then $38.40. So growth is still being forecast. But I'm being cautious here, especially given the size Meta already has. And for me, the risks here are simply too great. For me, another company is much more interesting. I introduced it to you here. Feel free to check out the video, and see you next time with the German Value Investor.